Hey, this is Alex Cook, and I am going to talk about cryptocurrency and Bitcoins, which is something that a lot of people are talking about right now. And keep in mind, this is still very much new technology. This is very much a developing market. So a year from now, you're probably going to look at this video and everything I'm saying is going to be completely outdated entirely. We might not be using Bitcoins anymore. We might be using some, new technology entirely. So, people kept asking me about this, and I find it interesting because I've known about Bitcoins and cryptocurrencies for a while, but when I first heard about it, and this was years ago, I frankly thought it was a joke. I thought, this is just going to be used by like a couple gamers or people who are trying to, do gambling online, things like that. I didn't take it seriously. And then went to 1,000, and then, I was kind of scratching my head a little bit, but I thought at 1,000, it's a complete bubble, this thing's going to crash. It did pull back, and then went to 10,000. So now it's got my attention. Now I kind of have to pay attention to it. I do think that there are some obvious bubble signs to it, but that being said, it has attracted a lot of attention. So I do think, it needs some examination. So what I'm going to talk about in this video is my thoughts on specifically Bitcoin itself, some thoughts on the market as a whole for cryptocurrencies and what its future might be. I do want to talk about the futures trading, and I also want to talk about some of the newer technologies, some of the newer cryptos out there that I actually am starting to see a legitimate use case for them. Like a legitimate use case as in not just either pure speculation, like a gold alternative, basically. That's because that's kind of what I view Bitcoin as, a gold alternative, or, just gamers and people who are trying to, gamble online or things like that. So first, Bitcoin itself is, I think the best way to explain it right now is as a gold alternative. Not as a currency alternative, but as a precious metals, like a gold, silver, platinum alternative. Because with those precious metals, you're not really using those to buy assets. Precious metals too, I am not particularly a big fan of them just because it doesn't produce a cash flow. It's not a commodity like oil or timber where you can consume it, so you can kind of figure out supply and demand. You basically dig it up out of the ground, and then you put it back into the ground into a vault. And people say, well, there's only so much gold out there, so there's scarcity value to it. All right, true, the earth may only have so much gold, but keep in mind, when the price goes up, that incentivizes more miners. So the available gold supply, yes, that absolutely can increase. So Bitcoin, see, the problem is when it doesn't produce a cash flow and when it's not consumed, like it's by any kind of conventional finance theory, it's fundamentally impossible to value. So there's some signs that I see of an obvious bubble to it right now, which is, we used to have the same when I was working in wealth management, where when the guy who sells you coffee in the morning is talking about stocks, that's when you want to sell. Well, in this case, I now see people on social media, like, Instagram, whatever, and what really caught my attention is this one, I'm not going to say her name, it's this one bottle service waitress talking about her crypto trading. All right, I'm not saying we're at a market top, but we're definitely not at a market bottom. All right, when this is going on. I've heard also anecdotes of people taking out loans to buy Bitcoins and loaning them taking a loan against their pension, and it's actually made a profit for them. So keep in mind, look at past bubbles like the real estate bubble. For a while, it worked. People weren't just going out and say, hey, I want to buy the worst houses out there. I want to get my houses foreclosed on. I want to have my mortgages go under. No, for a while, it worked until it didn't. So what's eventually going to happen is maybe not necessarily Bitcoin, but some kind of technology. I think the tech space in general is getting a little overheated. What's going to happen is it's going to get to a point where when the asset cannot continue to produce a return, that credit is going to have to come due, and people have to cut back spending in other areas. And that's how recessions eventually happen. And when I say recession, people sometimes think I'm talking about like a 2008 style crash. Not necessarily. These things happen. It happens in cycles. Credit is a cycle, and these things happen about every 8 to 10 years roughly. So Bitcoin, it does have some first mover advantages to it, which is probably why the price has appreciated so much. But that being said, I think the first mover advantage can only take it so far, because eventually, just like, MySpace had a first mover advantage over Facebook. Excuse me. It's a very technological dependent space, so to speak. So if something else comes along that can have better transaction times, for instance, because some Bitcoin transactions can take multiple hours to clear, you don't have that with dollars or any other just normal currency. So if there's some newer technology with cryptos that can do that, that might get more attention. That might displace some of the traction from Bitcoin. So it is still a very immature market. And I want to talk about one risk that I see is there are some cryptos that talk about they tether themselves to the US dollar. And I see this as potentially risky because they say that all the coins are backed 1-to-1 of dollars, but I've kind of heard this one before. There was, look up the Reserve Primary Fund in 2008. It was a money market fund that was very successful until it wasn't. So when I see cryptos trying to replicate dollars, to me, what problem is this really trying to solve? If you want to move dollars, we have the banking system for that. You don't need cryptocurrencies to do that. This doesn't really seem to solve a problem. To me, this is just a very risky money market fund. Not even a money market fund, because at least a money market fund is providing you interest. If I'm going to speculate into cryptos, it's because I'm going to see some type of upside reward to it, not just because I want to replicate dollars. So to me, this is just parking cash, but with a lot of unknown technological questions that I think still need to be answered. So that's one thing I want to caution people on. As a positive note, though, one thing that could eventually give cryptos legitimacy is there's now a futures market that's developing for Bitcoin, and if that expands to other cryptos later, like Litecoin or Ethereum or whatever, that might make cryptos more legitimate, because for any kind of currency to have legitimacy, you kind of need a futures market. And I'm not going to get into technicalities, futures versus forwards, but the point being is you need the ability to hedge that future exchange rate. So, for example, if I'm General Electric and I'm selling, I'm selling jet engines to a large customer in Europe, and they're going to pay me in euros, I need to be able to convert those euros back into dollars. And this is a transaction that's going to take, sometimes multiple months to clear. I want to be able to hedge that exchange rate risk in case it moves adversely to me. So there's always been a long-established futures, forward market for normal currencies. So that happens with Bitcoins because, the exchange rates from, Bitcoins to dollars, it's obviously extremely volatile. You check the news one day and it's changed completely. So if I ever want to legitimately do transactions in these cryptocurrencies, I need to be able to hedge that exchange rate risk. So a futures market, that might eventually lead to some kind of legitimacy for this. So one other new technology that I want to talk about is these things called smart contracts. And this kind of caught my attention because I started to see now a use case for this where cryptocurrencies can actually solve a problem. And one particular caught my interest called Chainlink, but there may be some others that I'm just not really aware of. So if you do hear of others, leave me a comment below. I'm still interested in learning more about this space. But what I find interesting about it is these are contracts that advertise themselves as being able to execute on their own without any kind of external instructions. Like you set it and forget it. And Chainlink advertises that they can link these smart contracts to any kind of outside data. All right, now this all sounds kind of abstract, but let me give you a concrete example where this could actually work. Some of the examples they've been talking about are, types of insurance or things like that. But one thing that I think this could solve in the financial markets are swaps. So take an interest rate swap. It really just needs a few pieces of data. It needs a floating rate, which if it can pull from outside data, it can pull from the 3-month LIBOR. It needs the fixed rate, which will program that into the contract. It needs a duration, and it needs the size of the swap itself, which those would just be hard coded into the contract. It just needs to pull 3-month LIBOR from ICE or Bloomberg, whatever. So what it could do is I could see these smart contracts basically being a set and forget swap. And this does a few things. One is it would reduce the administrative burden for banks or really any kind of company who's setting up swaps, because there is a lot of settlement accounting that has to go into it. There's a lot of back office processes, and I didn't really appreciate this until I was working for a company that had interest rate swaps or was was considering them maybe in the future, that there are a lot of back office processes that have to go into this. This might be able to automate some of that. And another thing is regulators have been wanting centrally cleared swaps. Well, this wouldn't really be centrally cleared, but it would be centrally reported. And that's not technically the right way to say it because it's not a centralized system. But the point is, all these transactions would be publicly available on the blockchain. So that would give you that transparency that regulators have been looking for. So to wrap this up, there are some things about Bitcoin in particular that I think may be a big bubble right now. But that being said, it is technology that obviously has gotten a lot of people's attention. I would be cautious buying things like Bitcoin now because just how much dumb money really is going at the moment. This could blow up in your face. This is like the money you're going to put in cryptos. This is your Las Vegas money. This is not core portfolio money. This is not your 401k money. This is the same kind of money you'd be using for your options trades. For your out of the money puts and calls where if it hits, great. If it doesn't, it's an acceptable loss. That being said, there are some newer things coming onto the market that I think could start legitimizing this. One is the futures market. So whether it's Bitcoin or something else, Litecoin, Ethereum, whatever, if a futures market really starts to take off, that could then maybe legitimize this as a store of value because I could hedge that exchange rate. And then also there's these smart contracts, which I think is kind of interesting, and I need to learn a bit more about this myself. This is still very new to me. And probably, again, 6 months from now or a year from now, you're going to watch this video and everything I say is going to be completely outdated entirely. But I do find it interesting, these smart contracts, and I do start to see now where cryptocurrencies could solve an actual problem. So if you have any thoughts, go ahead and leave a comment below. I like reading your guys' comments. And if you enjoy this, hit subscribe for more. All right, thanks for watching.